The RBI's third quarter review of the monetary policy is out tomorrow. What are bankers and treasury heads expecting from the Reserve Bank of India? There is an expectation that maybe the cash reserve ratio will be cut. There are some people who believe that it will be cut by at least a half percentage point to ease the liquidity situation in the financial system. But we did an ET Now poll across 21 bank treasury managers, and let's get the details of what they believe the RBI will do tomorrow. Let's go across to Simran Gill, who joins us from the newsroom.
Well, RBI had indicated in its last policy that the rates have peaked. So keeping in mind the current situation, on one side we have inflation that has started showing signs of easing off, and on the other side we see a slowdown in growth, which has become a major concern for RBI. So naturally the expectations this time around were quite different, and ET Now poll suggests that overwhelming majority expect a status quo as far as the key policy rates are concerned, and expect the rate reversal cycle to only begin post-April. And what most of them are expecting is a cut in CRR, and as much as 50 basis cut in CRR, because of the liquidity strain that we are seeing in the system as of now. But remember that RBI is conducting OMOs and has indicated time and again that it prefers to use OMOs as a tool for injecting liquidity. And moving on to the further point of inflation and GDP, majority are expecting inflation as well as GDP to be at the 7% level by March end. And of course we have seen, because of the high interest rates, there has been a slump in credit demand. So certainly majority is expecting that the credit growth for the banking industry would be somewhere between 16 to 17%, much below the 18% projection of RBI. And of course, they see a robust deposit growth for the banking industry at 19%. So that's an overall sense of what the markets are really expecting. So let's hope for some good positive news from RBI tomorrow.
Absolutely, Simran. Thanks very much for getting us all those details. But ahead of the meeting and the announcement tomorrow, what are key bankers expecting? In fact, the expectations of a CRR cut to ease the liquidity crunch have been firmly built into the system. So let's take a look at what some key bankers have to say on that.
I think what we'll do is probably look at reducing the CRR down in January rather than just reduce the rate.
Likely outcome on the basis of what you hear today is signaling rather than any specific action. At the most the market can hope for is something on CRR to correct the domestic liquidity situation.
There could be some relief on the liquidity side in the form of a CRR cut is probably a higher expectation than a rate cut.
It may be seen as a little too early to begin to either drop interest rates or, as we were in fact at one stage hoping, to increase the liquidity in the system.
Well, I don't believe that we are expecting a rate cut to come on the 24th of January, really. However, going forward, we do think that there will be an easing on the liquidity front.